7th, 2018. And my name is Alejandro Zambrano, and it's 9:07 a.m. in London. Sorry to keep you waiting. What we're going to do in the next 600 seconds is that we're going to provide you guys with a quick update on the Eurodollar, Bitcoin, gold, crude oil, and the DAX 30. And this is a daily update we host here at TradeCaptain.com, which is a website for anybody that is trading Forex, cryptocurrencies, commodities, and stock market indices. And that's it. Let's begin. And we'll begin with the Euro, as we usually do. Okay, so the Euro is little changed today. The market, following the break to 123.57, reached a high of 124.35. As for today, the market, as you can see, had a very nice rally from the lows, and the risk-reward ratio for new positions at these levels are not good. So I suspect the market might see some sort of a decline, potentially down to 123.57, a little bit of a down move here, as a better opportunity to buy. Former resistance could easily turn into support, and then traders are probably going to put stop loss orders down at 122.64. Why? Because the trend is short-term bullish about this level. So we might have a little pullback and then potentially up. Obviously, sometimes we take out highs without actually correcting. And at that point, if it happens here, we take out 124.35 and can potentially rally all the way up to 125. However, again, the risk-reward ratio for new positions here is not good if you're trading, say, on a 4-hour chart. Obviously, if you scalp, if you go down, you can always go down to the 5-minute. And the 5-minute, we take out this high here, which is the 124.35 level, and you could probably get away with putting, sorry about that, you can probably get away with putting a stop loss at 124 or so, right? So this, is very easy and potentially profitable, but my experience, and I've been doing this since 2006, is that you can trade a 5-minute, but it's very demanding, and it's very fast-paced, and everything, not everything, but a lot of the signals you see on the 5-minute are also false. So it's very difficult to trade, and that's why I'd rather stick with the big levels. Now, my own view on the Euro is the one I just shared with you, but is there any real good trading opportunity in the Euro right now? I don't think so. I think this market is going to trade sideways, and because of that, it's going to be difficult to trade this market within this range. So my personal preference, is that I'm going to wait for this to trade sideways for a few more days, and then when we have a nice narrow range, I might look to get involved. And US oil is trading in a nice range today, so I'm exactly going to show you what I mean by that. So here's US oil, and this is a 4-hour chart, and price is being guided by this rising uptrend, and also guided lower by this declining downtrend or trend line. And the market is just converging within this big range, and this is fully normal after a nice bullish move like that. You have the bullish move, you have some correction, then things starts to get choppy, and then within this range you just get hurt really easily. So here I'm just waiting for either the break to 64.22, alternatively a break to 60.07. Take that level out and we can go to 58.14. So those are the levels I'm watching. Now today, if we would take out this level, I wouldn't sell here. Rather, I want this to trade sideways for longer. The way it looks right now, maybe we'll have a break on Monday or Tuesday next week, and then I'll look to get involved. In the case of Bitcoin, Bitcoin is moving to the downside. So the market was trading really close to 11,768. And if we were to take out this level, this market could most likely just rally to the next high, which is about 11% higher from this high. So the idea was to buy here, potentially make 11%, and at the same time risk about 5.5 with a stop down here. Now that did not happen. Instead, the market decided to take out support. So what's happening here is the people that bought here on the 25th, those guys are probably booking profits. At the same time, if you happen to be bearish, there's been quite a lot of setups, on Twitter and TradingView and places like that, where people want to sell here. And technically, again, the price took out the low, so you're in a short-term downtrend now. So that would have been fine if you wanted to do that. And the market is now at this support level here. I think the way it looks, we're probably gonna try to tag it, but this is where it becomes like two conflicting forces. So you have this major low here, and then you have this other low here. So obviously, when we go down here, people are paying attention to this low. So traders that are slightly longer term in nature, so-called swing traders, are probably going to try to go long down here with stops just below, because they're looking for down and up. Okay, so that's what I think is going to happen in the next few days. But for now, we took out support, moving down lower, we'll go up to support. Traders might sell again here with stops on the other side. When do we know then that this downtrend have ended then? Well, it's the same thing as we knew last time. So last time, we said, we're creating these lower and lower highs, this level up here and this level up here, and I said, when we stop creating these lower highs, at that time is the trend probably turned bullish, which it did here. Market went up a bit and then down and then up. So we're looking for something similar here. Down, probably up, and then down, and then maybe take out that level. Gold, gold, looks like the euro. There's no major difference here really. The idea a few days ago is that if we took out this level, which is 13,000, so 1,300, so 1,323, this market could head to the upside, which it did. And we're now in the middle of the range. So if you have been holding on to long positions here, I think those people are probably booking profits up here right now. The market could, of course, take out this high. This is short-term resistance. Take out that level, and the market could maybe go up to 1350, which is a psychological level, and possibly all the way up to 1361. But I suspect there's going to be more sideways price action here. So I think if one bought down here and booked profits here, then it was good. And now we just wait for either the market to come down and look to buy again at lower levels, or the alternative is just to wait and just let the price narrow down even further, and then we'll either have a bullish or a bearish break. Here's the DAX 30, and let me just fix the axis. Every time I load this chart, it just gives the levels all wrong. There we go. So the market took out the low, bounced back up. I derived these levels simply by taking Fibonacci from this level here, which is last swing high, to the low. And I said that probably between these three levels, which are the three first fib levels, the market is probably going to try to roll over. Something it did, and we're in a little tiny profit now, and the market could of course move up again. But for now, at least, as long as you trade below 12,619, which is as high here from February 27th, this market is at risk of moving to the downside. And I'll be bearish as long as you're below that level. When this goes down further, we might be able to lower the stop to the actual high, and then this becomes the new trend defining level. Let's take a look at the economic calendar, if there's anything interesting coming up today. GDP numbers from the Eurozone. The first quarter is almost done. I don't think people care too much about the fourth quarter estimate by now. Maybe. Don't think it's a high mover, high impact event like this one though. So it could move things a bit, but I don't think it's going to move a lot. You have the ADP employment change, which is like a preview to Friday's note from payrolls, which could easily move the markets. Higher than 195, the dollar might get a little bit of a boost. Lower than 195, and the dollar might weaken. But macroeconomics haven't really been influencing, or like data hasn't really necessarily been a good indicator to what's going to happen with the dollar over the last few months. You had good data, many instances, you even had hawkish comments. So monetary policy and data today are not really the main drivers. It's more about what trade wars, the ECB. So I'm not really sure this is going to affect the markets too much. But volatility, yes, most likely you'll have that. Euro could be up with 50 pip or down with 50 pip. Unit labor cost, that's interesting. You know, it's another inflation measure that's going to be out for the fourth quarter. That could be something. I'm quite sure. Well, I know that this is something that the Fed looks like, so we want to keep an eye on that. But again, this is more for the macro nerds. You know, I don't necessarily think the market is going to buy or sell just because these numbers are good or low. And then from Bank of Canada, you have the rate decision at 3 p.m. I don't have a strong view on this, so I can't actually give you too much input right now. But you know, if we look at the dollar CAD, the market for now is short-term bullish above 128. And yesterday, I said to people, not in this presentation, but in another presentation, I said that traders could potentially look to buy here for this to head to the upside. And so far, it's looking all right. And obviously, as long as you trade above 128, then this market is going to be bullish. And the market could head up to 130.15, maybe 131. Take this level out though, and the market could go to the downside. So the idea is you look at the dollar CAD pair, and you try to see if the comments from the Bank of Canada are either hawkish or dovish. Okay guys, that concludes today's market update. Now don't forget to follow us on Twitter. I'm live on Trade Captain's Periscope today, and as well on YouTube, especially days like this, because we have been having issues with the website over the last, well, since midnight really, and we can be live on those channels, and that's without actually the website working here properly. If you want to follow us, and I do strongly suggest you do, click on Twitter down here, and you're gonna see this Twitter handle. For example, we're live right now here on this channel. You can also obviously follow us on YouTube on Trade Captain English. Here as well, you get notifications we're live. And yesterday as well, I did a special update, which is this one down here. It's the same actually, it's just that here we go. If I can find it now, here we go, this one. We did a special market update yesterday, and unless you were on Trade Captain or on Trade Captain YouTube, you wouldn't been receiving that notification. Okay guys, have a great day, and I'll see you guys tomorrow same time at 9 a.m. London time. Have a good trading day. Thank you.